Stocks on Wall Street end higher on the back of trade deal optimism. The Dow surges more than 500 points while S&P 500 and Nasdaq close at fresh records. Asian markets mirror Wall Street moves as the latest trade development between the US and Japan, as well as positive signs of a deal between the European Union and US, have spurred investor optimism. The GIFT Nifty is indicating a higher start for the Indian market. Crude oil prices hold steady as trade talks take the front seat. Brent trades at $68 a barrel. Gold prices extend losses following reports that the US and European Union were closing in on a 15% tariff deal. Prime Minister Narendra Modi has arrived in UK ahead of the signing for the free trade agreement with the United Kingdom. That will take place later today. Sources tell CNBC-TV18 that under the agreement, India will cut average tariffs for UK goods to 3% from 15% earlier. And in key earnings, Infosys reported a good set of numbers in Q1 FY26. Revenue beat estimates while margins came in line. Tata Consumers also reported largely in-line numbers. Meanwhile, pharma major Dr. Reddy's reported a mixed set of numbers in the first quarter. Hello, good morning. You've tuned into CNBC-TV18 and you're watching Power Breakfast with me, Vinny Motiwala. An interesting day that shaped up yesterday, but today also the cues that we're getting from the Asian markets as of now, a bit of a mixed cue is what we're watching out for. You know, the Japanese index, Nikkei, that's managing to hold on to very strong gains for the second day after that US-Japan trade deal has been signed. But other than that, Taiwan index, Hang Seng, that's quite muted in today's trading session. Even ASX 200, very, very muted, just 0.04% of decline. So, you know, it's not much of a downside or an upside that we're seeing. Very muted day of trade coming in for most of these Asian indices, I beg your pardon, other than the Nikkei as well as Shanghai, which are managing to hold on to some bit of a gain. Now, what is Nifty implied open indicating? Seems like a positive start is what we could watch out for. Again, today from the Indian markets, will that sustain is a key to watch out for. As of now, Nifty implied open is up 43 points in today's trading session. But that's the action that we have in terms of the Asian markets this morning. How are all these cues that we picked up from the US market, Asian markets impact our Indian markets? We have a team of research joining in with us to set us up for trade, tell you which are the important stocks to watch out for, as well as the cues in the world of F&O. So we have Sudarshan as well as Gaurav who will be joining in with us as well. But Sudarshan, first, before I come to you, let me actually set you up for the trade. What are we watching out for over there? Now, US markets, obviously, we saw that S&P 500, Nasdaq saw a bit of a rally coming in, Alphabet earnings that beat estimates as well. So that is also something, that we'll be keeping an eye out on. All the indices in the US market closed on the positive front. FIIs, what did they do in our Indian market yesterday? We saw FIIs actually sell around 4,200 crores, while DIIs continued to be buyers for 4,300 crores. So FIIs were selling while DIIs continued to buy. Important reactions that we'll be watching out for in our markets today. Obviously, a lot of earnings that were reported post-market hours, Dr. Reddy's, Tata Consumers, Infosys, among some of the reactions we'll watch out for today. And earnings today, we have SBI Life among important earnings, Bajaj Finance, IEX, obviously that coupling news that came in as well, market coupling news plus its earnings today. We'll see some reaction. Nestle among some of the names that we are watching out for. Other than that, we are watching out for Tilak Nagar Industries. The news break that was confirmed, the CNBC news break confirmed after the company is acquiring Imperial Blue. Keep an eye out on that. CDSL could see some impact. We have seen NSDL that has come out with the date of its IPO opening. 30th July will be the IPO opening date and will close on 1st of August. We have an IPO that opens up for issue today as well. That is Brigade Hotel Ventures that is opening up. Other than that, cues to watch out for as PM Modi is visiting UK, the signing of the UK FTA and India FTA. That is something we'll be keeping an eye out on. PMI data in India as well as in the European front, ECB's rate decision will be coming out. Keep an eye out on that. What are they going to be doing will be key to watch out for. Yesterday, obviously, Nifty reached those record high, highs of, reached those high, intraday highs of 25,233. Now, obviously, resistance is at 25,320 for the Nifty. Keep an eye out on that level. And like I had mentioned before, Nifty implied open indicating a positive start. But cues in the world of F&O, Sudarshan, what are we watching out for today?
So yesterday it was a good day of trade, and that was majorly led by financials, especially HDFC Bank and ICICI Bank. Both these banking heavyweights have hit record high, and that helped Nifty close firmly above 25,200. And also big gains were seen in Nifty Bank, which was up almost 500 points. For today also, tracking the strong earnings that Infosys has reported, and also some of the mid-cap IT companies, GIFT Nifty is indicating a start in the green, and currently it's up around 40 points. Now, talking about the flows in the cash market, you'll see FIs continue selling in the cash market, but it's not a concern. Yesterday, we saw FIs selling 4,200 crore, but it was fully offset by DIs, which have bought more than rupees 4,300 crore. In the derivative market, if you see, FIs have built positions majorly on the long side. So, in the index futures, they have bought more than rupees 760 crore. Even they have added long positions of almost 2,000 contracts, and also they have reduced short positions. And here, reduction was almost of 2,000. Now, there is a slight increase in FI long exposure. Yesterday, it was around 14.4%. Now, it's currently at more than 15%. Now, interesting data is on the option front. In the option market, if you see 25,100 call has seen shedding of more than 90 lakh shares. 25,200 call has seen shedding of 30 lakh shares. So what it tells you that on the downside for Nifty, now the first support remains around 25,100. And which call has seen the addition? 25,300 call. It has seen addition of more than 4 lakh shares. Now on the put side, 25,200 put has seen addition of more than 92 lakh shares, and also 25,150 put was active and has seen addition of almost 77 lakh shares. So now for now, support for Nifty is around 25,060. But above that also, first support, immediate support would be around 25,130 to 150, 25,150. But if it falls below, then support comes around 50 DMA, that is 25,060. Resistance, first resistance would be 25,320, that is 20-day moving average. If we manage to breach that or cross that, next support comes around 25,520. Stocks in focus, 3 stocks in the band: RBL Bank, Bandhan Bank and IX. Keep an eye on stocks like Infosys, which has reported a strong set of earnings. Basically, it has outperformed all the peers amongst all the large cap IT company. It's the only IT company which has reported growth. And also focus on auto ancillary companies like Sona BLW, Samvardhana Motherson and Tata Motors. On the back of there are some reports that US might sign agreement with EU, and also it might involve auto companies, auto tariffs, and that might be reduced to 15%.
Okay, Sudarshan, thank you so much for that. And Gaurav, which are the important stocks that we are keeping an eye out on today? Good morning.
Well, good morning. There are many stocks which will be in focus on the back of the earnings. First, let's talk about some of the IT giants. First, let's talk about Infosys. Very good set of numbers is what we saw, where we saw net profit actually increase, and at the same time, they have also increased their lower range of the guidance from 0% to 1%. So that was actually a key thing to watch out for. Second is Dr. Reddy's. Here also we saw good set of numbers. The numbers were actually higher than what we were estimating. At the same time, we also saw margin expansion. Now they stand at around 28.2% versus what it was at 26.7%. Tata Consumers, on the other hand, actually came up with inline set of numbers, we could say, because profit was actually in line with what the street is expecting. What was positive is that the EBITDA margin fall was actually lower than the gross margin fall. So some kind of efficiency, cost efficiency is what we saw here from the company. Coforge, on the other hand, actually came up with very good set of numbers. Once again, the revenue increased almost by around 8% versus the expectation of 6 to 7%, and at the same time, EBIT margins also remain unchanged. Persistent System also came up with good set of numbers, where we saw revenue was actually a little bit higher than the poll, and at the same time margins were also increased almost by 20 basis points. Bajaj Housing Finance also came up with good set of numbers. We saw AUM growing at around 24%, and at the same time profit also increased almost by 17% on a year-on-year basis. Let's also talk about some of the stocks which will be in focus on the back of the news flow. First is IEX, because there is a negative news flow here. Now CERC has ordered market coupling implementation. Now, as per market experts, this is going to be negative for IEX in terms of market share, PAT and price to equity. Inox Wind is also in focus today because company has approved equity share raise worth 1,250 crore rupees. This will happen at 120 rupees per share. Natco Pharma is also in focus because, as per news sources, the company is going to acquire around 35% stake in Adcock Ingram for around 2,000 crores. And lastly, let's also focus on Tilak Nagar, because as per CNBC Newsbreak, now company is going to acquire Imperial Brew for the cost of 4,150 crores. So definitely watching out on all these stocks today.
Okay, thank you so much for that, Gaurav. We'll keep an eye out on the stocks. But like you were mentioning, Infosys, that's the important one that came out with these numbers as well, and has delivered revenue growth in constant currency terms at 2.6%. Rima is joining in with us to give us more details on the number. Rima, what are we watching out for today in terms of Infosys?
Indeed, it's a good start to the year for Infosys. Good Q1, dollar revenue growth up 4.5% quarter on quarter. In constant currency terms, it was a growth of 2.6%. Big beat versus the 1.5% growth that we were anticipating. And even on a year-on-year basis, the company has clocked in a growth of about 3.8%. As you rightly pointed out, in the large cap IT space, Infosys now is the only IT company to report growth. But bear in mind that this also comes in on the base of last quarter when revenues had fallen 3.5%. So after last quarter's shock, the negative surprise, this time they've managed to reverse and clock in a good quarter. So margins are a clear beat. Revenues are a clear beat. Margins have come in line with estimates at 20.8%, a small drop of 20 basis points on a quarter-on-quarter basis. Profits ahead of estimates are led by the revenue beat. The company for the full year is now guiding for 1 to 3% revenue growth. It perhaps includes the 2 acquisitions that they have done, and plus the macro environment has not deteriorated in the prior quarter. Operating margins remain in line with estimates at 20 to 22%, no change there. The other positive is the deal wins. The deal wins are up nearly 45% on a quarter-on-quarter basis at $3.8 billion versus $2.6 billion the prior quarter, and 55% of the large deal wins are net new. So all in all, it's a steady and strong quarter for Infosys, meeting the mark on profitability, beating on the revenue front.
Thanks so much for that. On that note, listen into the Infosys Management MD and CEO, that is Salil Parekh, and what he had to say at the press conference on their division in terms of guidance.
The guidance, what we have seen this quarter is a strong performance in terms of where we have delivered the 2.6%, as you pointed out. With that and with the current outlook, where we have seen a lot of the discussions on the economy worldwide having come to more stable situations, but still seeing that it's not fully settled. Given that, we've increased the lower end of our guidance as we go closer into the, progress into the year, closer towards the end of the year.
Okay, on that note, we're going to slip into a very short break. So don't go anywhere. We'll give you more news and updates after the break. Welcome back to Power Breakfast on CNBC-TV18. And in the US markets, what we saw was that Wall Street ended with gains. The Dow Jones adding over 1% in yesterday's trading session. Record highs coming in there, while S&P 500 clocked yet another record high. Its 12th such close of the year. On the earnings front, we had Tesla that reported a 12% decline in terms of revenue and a 16% decline in the automotive revenue as sales fall for a second straight quarter for the company. Meanwhile, what we saw coming in for Alphabet was that they reported a beat on the revenue, which saw a 14% uptick year-on-year basis. The company also said that it would raise capital investments by $10 billion in 2025. The shares of the company saw a rise of 3% in after-market hours trading. Let's go across to CNBC's Steve Kowak, who's here to give us more details on this front.
U.S. markets were up across the major indexes in Wednesday trading as Tuesday's trade deal with Japan sparked hope on Wall Street that more deals would be finalized before the August 1st deadline. The Dow adding 508 points, the S&P 500 climbing 49 points, and the tech-heavy Nasdaq rising 127 points. Another tough month for home buyers and sellers. According to the National Association of Realtors on Wednesday, sales of previously owned homes dropped nearly 3% in June. Analysts were expecting less than a 1% drop. And with fewer homes selling amid stubbornly high mortgage rates, supply continues to grow. The number of units for sale last month was up 16% year over year. The average rate on a 30-year fixed-rate mortgage is just below 6.8%. And Uber announced a new feature Wednesday that allows women riders to request to be paired with women drivers. The new tool will begin piloting next month in the U.S. Women drivers can also set their preference to drive other women. The company says there is no guarantee the app can always honor the requests, but the goal is to give women more choice, control, and comfort when using Uber. Competitor Lyft started a similar service 2 years ago. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. Now, getting you the latest on Trump-related developments, we have Dia joining in with us in a special segment, Trump Watch. Dia, good morning.
We begin with the movement on the trade front. The U.S. and European officials signaled progress in tariff talks Wednesday after U.S. President Donald Trump announced a pact with Japan, and China said its vice premier would attend bilateral negotiations next week. Listen in.
Just made a deal with the European Union where they're going to pay the United States of America 100% of the cost of all military equipment. They're going to ship it to the European Union, and then they'll distribute it, and much of it will go to Ukraine. It's been a long time since you've heard those words, because we're in for $350 billion. But now we send it to Europe, and Europe pays, and we're in the process of completing our deal with China. And as you know, the UK, we made a deal. It was a very good deal for everybody. Everybody's happy. It's always nice when everybody can be happy. But mostly we'll be charging straight tariffs to most of the rest of the world, because we have over 200 countries. People don't realize that's a lot of deals. Even if you're like me, a deal junkie, that's a lot of deals. That would be too much for anybody. Ooh. And we're making deals with various Asian countries that need it. And it's actually hard to believe, you don't think of it, but Asia is very close to Alaska, relatively speaking. It's not the closest, but it is pretty much the closest when it comes to oil and gas and energy. And we're making some incredible deals.
And responding to a story by the Wall Street Journal, the administration called it part of a series of fake news stories against the president. Now, the Journal had reported that the Justice Department informed Trump in May that his name appeared in the Epstein files, a claim that the White House flatly denies. Now, the U.S. has stepped up military support for Ukraine. The State Department said that it has approved $322 million in proposed weapon sales to Ukraine to enhance its air defense capabilities and provide armored combat vehicles, coming as the country works to fend off escalating Russian attacks. And in other news, President Donald Trump signed executive orders to put in motion a new White House plan to boost artificial intelligence development in the U.S. by loosening regulations and expanding energy supplies for data centers. Now, the orders that Trump signed include a measure addressing energy and permitting issues for AI infrastructure. Next, a federal court appeals ruled Wednesday that President Trump's order seeking to end birthright citizenship is unconstitutional, affirming a lower court decision that blocked its enforcement nationwide. Moving on, Columbia University announced that it had reached a deal with the Trump administration to resolve several federal probes into allegations that it had violated anti-discriminational laws following months of negotiation to restore federal funding to the school. Columbia did not admit to wrongdoing but agreed to pay the government a $200 million settlement over 3 years and an additional $21 million to settle U.S. Equal Employment Opportunity Commission investigations. That's all for today. Now back to you, Vinny.
Okay, Dia, thank you so much for that. But on that note, we're going to slip into a very short break and we get you the latest on India-UK free trade agreement after the break, so stay tuned in. Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now, Prime Minister Narendra Modi has arrived in the United Kingdom ahead of the signing for the free trade agreement with UK. That will take place later today. Now, Parikshit is joining in with us to give us more details on this one. Good morning, Parikshit.
Well, yes, the most important aspect is the average tariffs for UK goods will come down from 3% from 15% earlier. Now, this is the important headline in terms of the reduction in average tariffs between India and the UK. The FTA will eliminate tariffs on 99% of goods traded between India and the United Kingdoms. Notably, shrimp, tuna, fish meal, feeds, marine exports in general. 99% of them will see zero duties in the United Kingdom. Tariffs on Indian leather and footwear will be eliminated from 16% to zero. Duties on Indian textiles will be reduced to zero as well. We're also learning from our sources that India's footwear, textiles, and leather exports to United Kingdom will get preferential access over Bangladesh, Pakistan, and Cambodia. Tariffs on engineering goods will also come down from 18% to zero. India's generic medicines market will also get zero duty access in the United Kingdom. Overall, all our labor-intensive sectors, including gems, jewelry, toys, plastics, chemicals, auto parts, to benefit from tariff relaxations. On the agriculture side, zero duties on 95% of agriculture and processed food tariff lines, but our core areas on dairy, apples, oats, edible oils, wheat, and rice, that is excluded from the free trade agreement. So that's a big move that is coming in terms of the India-UK FTA. Tariffs on automobiles will also be reduced by India, but these are only on electric vehicles and futuristic cars, which will be reduced to 10% over a 10 to 15-year period.
Okay, Parikshit, thank you so much for that. But with that, we are absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, your Bazaar Morning Call.